Hi, hello everyone. Welcome back to my channel. In this video, a problem is solved on set off and carry forward of losses. Kindly watch the video till the end, like it and share and subscribe the channel. If you have any comments about the video, please put your comments in the comment box. Now, let's move to the whiteboard. It's a problem on set off and carry forward. The question is Mr. Let me stress this one here. Mr. Viresh submits the following information for the previous year 2019-20. Compute his GTI for the assessment year 2021 and ascertain the amount of losses that can be carried forward. House property, house number 1, income rupees 1,20,000. House number 2, loss rupees 80,000. Brought forward loss of assessment year 2003-4 rupees 30,000. Next, B, business income from cement business before depreciation rupees 1 lakh. Current year's depreciation rupees 50,000. Brought forward loss of 2015-16 of previous year 2015-16 rupees 75,000. Then unabsorbed depreciation of 2014-15 year rupees 50,000. unabsorbed capital expenditure for scientific research of previous year 2016-17 rupees 25,000. Capital gains short-term capital gain rupees 25,000. Loss from long-term capital asset rupees 20,000. D. Income from other sources income from the activity owning and maintaining race horses rupees 1,50,000. Brought forward loss from the activity of owning and maintaining race horses of previous year 2018-19 rupees 50,000. Winnings from gambling gross rupees 1 lakh. Interest on securities rupees 60,000. So now from this we are required to compute the gross total income. So computation of gross total income. Name of the assessee Mr. Veeresh. Previous year 2019-20. Assessment year assessment year 2020-21. So now let us discuss the problem here first. So house property here. So we have got income from house 1 rupees 1,20,000 and we have got loss from house 2. So 80,000 it can be adjusted. Brought forward loss of assessment year 2003-4 is 30,000. So this brought forward loss can be carried forward for a maximum of 8 years. So it has come from 2003-4. So 3, 4, 4, 5, 5, 6, 6, 7, 7, 8, 8, 9, 9, 10, 11, 12. So by 2011 only it is over now. So this cannot be adjusted as it is time barred. Then income from business here. So before depreciation it is rupees 1 lakh. So current year's depreciation first we need to adjust here. So 50,000 will be remaining. Then there will be unabsorbed. There is a brought forward loss of 75,000 which can be adjusted. So still there will be 25,000 which should be carried forward. Even unabsorbed depreciation should be carried forward. Unabsorbed capital expenditure for scientific research should be carried forward. Capital gain, we have got a short-term capital gain 25,000 which is taxable. Then there's a loss from long-term capital asset which cannot be adjusted against either short-term capital gain or against other heads of income. So it should be carried forward. Income from the activity of owning and maintaining resources is rupees 1,50,000 whereas the brought forward loss from the same of the previous year 18-19. So 18-19, 19-20, 20-21. So still it is within the time limit, so it can be adjusted here. Winnings from the gross gambling, gross is given, we should take directly to the GTA column. Then interest on capital, interest on securities, it is also taxable here. So now let's go for finding out the incomes here. So particulars, inter source, inter head, then next carry forward, GTI. So now first let's go for income from house property. So income from house property. So there's a income from house 1 less set off of loss from house 2. So income from house 1 is rupees 1,20,000. So minus 80,000 here. So let us underline here. So the difference we should directly, it is 40,000, which shall be taken to GTA column. Then the next one here, this is, of course, this is income from a house property. I will write in short HP here. Then income from business. So now income from cement business. So against this we can less current year's depreciation, less set off of brought forward loss. So now let's go for finding the values here. So income from business is given as rupees 1 lakh. So 1 lakh. So current year's depreciation is given as rupees 50,000. So let us underline here 50,000. So still there will be income of rupees 50,000 is remaining here. So against this we shall make an adjustment of rupees 75,000. So there will be 25,000 rupees loss, which will be taken to carried forward column. Then this is a loss from business. Then similarly we should carry forward unabsorbed depreciation. Then we should carry forward unabsorbed capital expenditure on scientific research. So both amount we should carry forward because they can be adjusted against business income only. So here they are, it is a 50,000, then it is 25,000. Then the next head comes here, capital gain here. So capital gains. So in the capital gains, there is a short-term capital gain. So directly we shall take it to GTA column here. So the short-term capital gain is given as rupees 25,000. Then similarly, there is a long-term capital loss which should be carried forward here. So that we shall take it to. So such loss is rupees 20,000 here. Then the next one comes here, income from other sources. So under this here, income from the activity of owning and maintaining racehorse less set off of brought forward loss from the activity of owning and maintaining. So it comes here. So income from the activity of owning and maintaining resources is given as rupees 1,50,000. So from this we should subtract 50,000. So the difference here is, it is 50,000. So let us underline this. It is rupees 1 lakh is the difference. So now we should take winnings from gambling. So gross is given. Similarly, we got interest on securities. So now we shall take the amounts here. Winnings from gambling is given as rupees 1 lakh. Then interest on securities, it is given as rupees 60,000. So now let us take the sum of this to the GTA column, which comes to rupees 2,60,000. So now let us take the total. So here we got 25 plus 25, 50 plus 50, 1 lakh, 1,20,000. So let me put in the bracket here. So this is the total amount of the loss to be carried forward. Then the GTA will be 2,60,000 plus 40, 3,25,000 here. So 3,25,000. So now let's go for the notes. Brought forward loss from house property cannot be adjusted as it is time barred. Then unabsorbed brought forward loss from business, unabsorbed depreciation and unabsorbed capital expenditure will be carried forward to next assessment years. Then long-term capital loss, next assessment years. Okay, long-term capital loss cannot be adjusted against short-term capital gain and other incomes. Then brought forward loss from the activity of owning and maintaining race horses can be adjusted against income from the same as it is within the time limits. So these are the notes which we are required to provide here. So let me just make the bold here. Then the heads of incomes here. Then here it is capital gains, income from other sources, that it's the total here. So thank you.